So Norm, Tom, and Ted, thank you so much for joining me on today's episode where we're going to be taking a deep dive into PSCU's third annual Eye on Payment study conducted by PSCU here. Now, there's certainly a lot of data that's jam-packed into this report here. We're certainly going to be diving into a lot of that. But first, Norm, let's start with you here for this first visual that we're going to be putting up on the screen. And perhaps maybe you could kind of pull out some of the key insights for our audience that they should be taking away from it.
Sure, absolutely. Well, not surprisingly, respondents in this year's installment of our IM payment study showed an increase in shopping online. Very specifically, the number of survey respondents that say they shopped online at least a few times a week, it has increased by almost 50% since the pandemic started. And I would say one of the more pronounced changes has been with credit union members who make online purchases at least a few times a week, which is up nearly 70% since pre-pandemic. And this really just isn't the younger generations that are driving this. These results tend to hold true throughout all the various generational segments.
Yeah, I'll just kind of add on to that, Norm. In addition to what we've seen with the online purchases, there's also been a significant increase of the use of mobile apps and online platforms for ordering grocery ahead, as you would expect. As you can see on this current visual here, food pickup or delivery being ordered through a mobile device has gone up nearly 50% during the pandemic period. And what we found was, 70% of respondents say they make decisions about how to pay primarily based on what is the most physically safe type of opportunity at the point of sale. So it's clear that COVID has made a significant impact on what consumers are choosing in terms of their payment and purchasing behavior options.
It's interesting to see that these numbers, first of all, track closely with Mercator's survey numbers, but also the extent of the change and the rapidity of the change are really kind of breathtaking. 50%, 70%. These are not the kind of growth numbers that we're used to in the financial services business. And it's what Tom said. People are concerned about safety, and they suddenly realize that on their computer, and increasingly, as we'll see in a bit, on their mobile phones, they have the ability to maintain their purchasing lifestyle while attaining a degree of security. And that's partly because they're buying classes of goods that they might not thought of buying through a digital channel before. Meals, more than a pizza delivered to the door, maybe a 3-course Easter dinner. Groceries, that category had been growing, but it's growing like Topsy now. I'm especially interested in the projected post-pandemic number that PSCU has, where credit union members, 22% of credit union members say that they'll continue these behaviors post-pandemic. I would like to watch that very closely because it's extremely important in plotting the industry's future that we understand how many of these behavioral changes are permanent and how many are simply a port in a storm during the pandemic.
So, Tom, I'm really glad that you brought up COVID-19 here because it's certainly been a huge factor in just consumer behaviors here in 2020. And it's also going to be a huge factor ongoing here. So perhaps maybe we could kind of take a look at some of the key insights that the Eye on Payment study is pulling out here. And also maybe kind of talk about some of the traditional banking methods and some of these emerging trends that we're seeing and how that all relates to consumer buyer behavior.
Thanks, Ryan. One clear piece that we've seen has been a significant interest in growth in contactless card usage. For the study itself overall from respondents, we saw a 72% increase of folks that said they had a contactless card in hand. So clearly financial institutions, including credit unions, are starting to issue those contactless cards. As you see on the screen here, the number of credit union members who responded said they've nearly doubled in being able to have access to a contactless card. And then it's impacted usage as well. Before the pandemic, people were reporting in the mid-50s from a usage standpoint. That's grown into the mid-60s now from a utilization standpoint for those who have cards, and they're projecting even after the pandemic that 69% will be using contactless cards on a regular basis. And then also here, take a look at the screen of where they're using those cards at. So they're clearly in those essential businesses. They're in the grocery stores, they're in the pharmacies, they're in the fast food restaurants, even at the gas pumps. So as more and more of these retailers start to provide access to contactless cards at the point of sale, you can see the consumers are going to be more actively choosing this really clean form of payment behavior. But it's not just on contactless. There's clearly opportunities on the mobile payment side as well, and Norm's going to kind of address that.
Yeah, and with respect to mobile, we've seen, obviously, as Tom mentioned, a surge in contactless penetration usage, and we've seen pretty similar stuff on the mobile wallet and digital banking side of the house. Looking back to 2019, 32% of our respondents had stated they were likely or extremely likely to use a mobile wallet in the next 6 months. And in our 2020 study, that increased to 38%, a lift of about 8 percentage points year over year. Interestingly, when you compare to credit unions to non-credit unions, those who are currently using a mobile wallet, credit union members responded with a 49% level, and non-credit union member respondents came in around 28%. So pretty slanted there towards the credit union side. Mobile banking also continues to trend up. We're seeing respondents who either make payments or do their banking by a mobile device was up 3 percentage points year over year. So continuing to make positive momentum there. When you look towards more traditional payment methods, debit remains the first preferred payment method for the second year in a row. And 41% of our survey respondents had come in saying that they preferred debit, whereas 35% preferred credit. So the traditional payment types, they are still very important. Debit and credit both continuing to be used for everyday type of spending purposes. And when it comes to major purchases, larger dollar purchases, credit card still comes in on that. And again, when you think about mobile payments and contactless payments, you also think about security, and those digital type of payment methods and management programs, they do factor in higher levels of security, but it's still, at the end of the day, the traditional payment methods are very important to consumers, and they're continuing to tell us that.
It's interesting to see how the behaviors are simply picking up on technology that has been in the market for some time. And really all they're doing under the pressure of the pandemic is accelerating the growth of those behaviors. Many consumers took advantage of contactless pre-pandemic, but post-pandemic or in the middle of the pandemic, when people are worried about touching things that may contain bacteria or germs, obviously contactless is going to emerge as a solution. I'm very interested to hear that last year debit was the preferred form of payment among your members. In this sense, the PSCU members are really leading the pack and becoming a bellwether for the rest of the industry. Our survey, which is of the entire North America population, indicated the same thing, but only for the first time this year. That's a tectonic, secular change in consumer behaviors, and we really have to pay very close attention to it to make sure that we can catch it if it continues or if it recedes back to the credit card as being the preferred mechanism for payments.
Now, Norm, I want to get to you for this next question here, right? Because one of the things that I love about the ION payment study here is that it breaks also a lot of this consumer behavior down by economic and social influencing factors here. So let's kind of dive a little bit into that section of the report and maybe kind of pull out some of the key insights that this study is presenting to our audience here today.
Yeah, Ryan, obviously across the various generations, there have always been various differences in payment preferences and responses as such. So let's break it down. Taking a look at the boomer segment, those respondents prior to the pandemic, nearly half of them shopped online at least a few times per month. And during the pandemic, this number has increased by 27%. Probably 10 or 15 years ago, that would have sounded very counterintuitive that the older generation would be spending more online. And we are beginning to see this materialize even further over time as we go. Within the boomer segment, the number of people who report shopping online at least a few times a week, it's more than doubled to 15% during COVID-19. And most plan to continue this practice post-pandemic. In addition to being comfortable with online shopping over time, nearly a third of credit union members in this generation use mobile banking. So very interesting stuff on the boomer segment. Let's talk about the Gen X segment, my segment. Very similarly to older millennials, the Gen X segment, they tend to prefer debit cards, but they are beginning to show some partiality towards credit cards as that payment method has risen in popularity over time. The Gen X respondents have really gravitated towards the use of contactless cards since the pandemic has started. Prior to COVID-19, 62% of Gen X respondents used a contactless card at least a few times per month, and that number has risen to 74% since the pandemic, and it's expected to remain steady, a 12 percentage point lift there. Overall, consumers in the Gen X generation, they're slightly less prone to use mobile banking than younger generations. Some of the data is yielding that result. Looking at older millennials, those who are in their 30s, they still prefer debit as their primary payment method, but they're starting to show some preference for credit. And I think, some of that has to do with the fact that, the older millennials, they've come up through some pretty tough times. They're going through their second recession at this point. We've often referred to them as a generation that has been shaped by the recession, and they may be directly feeling the financial effects of the pandemic and gravitating a little more towards credit. They do tend to be avid online shoppers. This is really the big sweet spot at this point. Prior to COVID-19, 30% or 37% of the older millennial respondents said they shopped online at least a few times a week or more, and that number has risen to 45% as a result of COVID-19, so an 8 percentage point lift there. Like their younger counterparts, older millennials tend to make payments or do mobile banking on their mobile phones. They've really tended to cozy up with that method as well.
Thanks, Norm. I think you left the last two categories for me because I have firsthand knowledge with daughters in each of the two other categories. So if you look at the younger millennials, this is the group in their mid-late 20s and early 30s. This group, of course, has a prolific use of debit and stronger than credit, but this focus for this group is really around the mobile technology. We've seen a more prolific use of mobile payments and mobile wallets within this group than any other generation. 6% of younger millennials cite mobile wallet usage as their preferred payment method, and 52% say they have used a mobile wallet at least a few times a month. These groups are also the most avid users of mobile banking technology, with 87% of credit union members saying they make payments or do banking on their mobile phones. And then looking at the Gen Z group, this group has the strongest preference for debit. This is that group that's 18 to 22. 44% said they selected debit as their preferred payment type, up from 39% last year. This group has also been a prolific user of the contactless technology. 74% of Gen Z respondents say they've used a contactless card at least a few times per month. And then from the impact of the pandemic, the Gen Z group has been the most impacted from a lifestyle perspective here. They reported the most negative financial effects from COVID-19 relative to a loss of job, income, or healthcare coverage. 67% of them said they were impacted in some way. So if you think about that group, that tends to be in the service sectors. And so they were the folks that were really pushed out of their jobs in restaurants and bars and other places. So it'll be interesting to see how those behaviors might change as we go into a post-pandemic environment.
It's interesting that both of you should have brought up the previous recession because it's interesting to compare the two. The previous recession, of course, was precipitated by a collapse in the real estate market. This is a downturn associated with businesses closing or going on hiatus, and therefore it has an employment issue as well. Nevertheless, the elder millennials or their parents learned a couple of lessons between 2008 and 2011. And that was, one of them was that the plastic cards in their wallet were tools for controlling household spending and maintaining household liquidity. It's very unlikely that the average consumer is going to be able to tell you the difference technically between deposit money and credit money, but they know the difference in their bones. They know when they pay with a debit card, it's with ready cash. They know when they pay with a credit card that it's the bank that's paying, and they'll eventually have to pay the bank back and interest for the privilege of using the bank's money. I think those behaviors have carried into this current recession, and that people are realizing, especially with the addition of technology to the mix, that they have tools at their disposal for keeping the household above water until we get on the other side of the pandemic and see what this economy looks like on a permanent basis.
You know, I certainly love all the data and insights that we're talking about here today, but I really kind of feel that we're only hitting the tip of the iceberg of the report. And for those of you who are following along on PaymentsJournal.com, we're going to make sure that we have a link for the Ion Payment study in the article below. So certainly feel free to check out the entire study there. But now, Tom, I kind of want to give our audience just a little bit of kind of the key takeaways from the entire report here. And then also, one of the things I think is very important that we make sure that we deliver to our audience who are watching this video and listening to the audio here are, what are some of the executable takeaways that they should really get from the data or information found within this report? So Tom, perhaps let's start with you on that there of kind of the key takeaways from the report, and what are some of the executables that our audience should be really getting from here?
Thanks, Ryan. You know, we're clearly, you know, we've entered a new era for consumer expectations. You know, at the start of the pandemic, everyone went home, and branches closed, and credit unions had to begin figuring out how to service their members in a very different environment. You know, we've got this new normal that's developed now, where you've got some of the members are still sitting at home and not coming in the branch, and others are, you know, beginning to start to enter. So you've got to really service both ends of your spectrum of how your members feel. And you really need to look at, as a credit union, what's your overall service strategy? You know, is your card program aligned? Do you have a contactless strategy? How are you realigning your rewards program? Have you really looked at your fraud protection to make sure with all of this additional online activity that you're set up with the providers to make sure that your members' transactions are safe? So clearly, you've got to look to your overall strategy to meeting the changing needs of the consumer and the environment. Second thing I bring up, Ryan, would really be around accelerated digital adoption. Many consumers were forced to make some pretty drastic changes quickly. I mean, I look at my own father, 82 years old. He had never done digital banking. He had never used an ATM. He had always done all of his banking at the branch, either at the drive-through or, you know, going into the branch and dealing with the teller. Once COVID hit, he hasn't set foot in the branch. You know, he's learned to do digital banking. He's learned to use the ATM, and he's quite comfortable with it now. So when you think about your digital banking strategy, are you adjusting that to meet the needs of the changing consumer out there, particularly thinking of that older audience and trying to make sure they're comfortable and having the same type of experience on a digital perspective as they had within your branch? And then a third aspect I'd bring up would really be around education. You know, it's really the role of the credit union to help make their members comfortable with a lot of these new emerging payment forms. 94% of folks in the survey said that they trusted their credit unions, that they were a truly trusted financial partner. So credit unions have the opportunity, as we look at whether it's contactless or using mobile wallets, how do they help educate their members to make sure they're comfortable in how to use those and making sure they feel safe using them? So it's a great opportunity for credit unions to really step up and be a really strong education partner for their members. And I know Norm's going to address a few of the other opportunities and takeaways as well.
Yeah, and the first one I wanted to jump into is safety and security. And through the study, the people have spoken again for a third year in a row, both credit union and non-credit union members alike in the 70% range. They report that they make decisions on how they pay for something based on the security facets that come along with it. So it's absolutely imperative that financial institutions continue to focus on safety and security, especially in light of the fact that fraudsters are continuing to innovate themselves and find more innovative and effective ways to attack our financial information from institutions. I believe that access to mobile alerts and controls and integrating those items into their digital banking solutions to allow a financial institution customer to put their cards on hold and to release them when they feel safe to use them again, giving the empowerment to people to proactively conduct their affairs with a sense of security is really going to be huge as we move forward. And that's really just one example. As we also have discussed, again, second year in a row, debit continues to be the preferred payment vehicle, with 41% of our respondents preferring debit and 35% preferring credit. And then lastly, a concept we refer to as credit union card first. Typically and historically, we focused on different types of tactics, techniques, and educational opportunities to encourage additional spend at the point of sale. And I think, moving forward, we're going to have to look beyond point of sale. Our traditional payment vehicles are finding their ways into mobile apps. They're finding their ways into person-to-person payment types of mechanisms. There are a lot of different channels that these payment vehicles ride through. So it's really important that issuers tend to provide more information, education, as well as promotions and incentives to encourage people to include their payment cards in those particular vehicles, in addition to using those at the point of sale. So as we become more digitally focused as we go, getting towards a digital first mentality, it's going to be extremely important that this gets embraced across the industry and follow through accordingly.
I think that the notion of safety and security is key, but I'd add a third aspect to it, and that's trust. I notice from some of your findings that 49% of credit union members use a mobile wallet as opposed to 28% of non-credit union members. That's an astonishing figure, and it's an astonishing gap. And I think a lot of it goes to trust in the institution, trust in the product that the institution offers, trust as a member of an institution, not simply as someone in a line waiting to get to a teller or to an ATM. I think safety, security, and trust, especially in an environment like this, are going to help move the industry forward to the other side of this thing, whenever and wherever that may occur.
So Norm, Tom, and Ted, thank you so much for taking the time today for unpacking PSCU's third annual Eye on Payment study. And it's just one more reminder for our audience here who are following along on PaymentsJournal.com. You're going to be able to get a link to that Eye on Payment study in the article below. So certainly feel free to check that out. Certainly a lot of great insights that we unpacked here today, and many more found in that report there. So again, Norm, Tom, Ted, thank you so much for joining me on this episode of the Industry Insight series, and we hope to have you back on them real soon.